Hello, folks. Once again, welcome to our webinar. My name is Naeem Aslam, Chief Market Analyst at AvaTrade. Before we continue any further, please confirm by saying yes or no that if you guys can see my screen and you guys can hear me as well. I'm not getting any answers yet, so I don't know. I can see a lot of people, but with few question marks over here. Guys, can you hear me? Can you see my screen? Let me type this in. I don't know if there is something wrong with the function of this system or because I don't see any replies from you guys. That is a strange element. If I see the chat, let's see if you guys can actually do this. So can you guys actually hear me? Alright. Folks, can you guys please confirm if you can hear me or I don't know what it is with the system because everything is okay from my side. So why can you guys not hear me? I have no idea about this. Sorry, give me a second while I try to resolve this technical issue. I'm not sure if you guys can hear me. I see that a lot of people here. Just raise your hands. Let me see if that works. Just raise your hands if you can hear me, please. Can you? Wow, this hasn't. I think it's something. I can't hear you. Okay, now, hello. Now I'm getting the reactions. Okay, there we go. So guys, Phil, can you confirm? Goreksha, can you confirm if you can hear me? Let me just unmute more. So how about now? Can you hear me? Folks, please type and then so that I can see because then we can begin the webinar. Otherwise, if you guys cannot hear me, then I wouldn't know that what is going on with this. And I don't see many answers coming. Try to raise hands maybe. I don't even. Okay, hello folks, this is Naeem Aslam, Chief Market Analyst at AvaTrade. Apologies, we had some sort of an issue earlier with the technical issue, but I'm here with you guys and I'm very excited to be with you guys as always. So let's begin by asking the most fundamental question, which is that can all of you guys can hear me and can you see my screen as well? Okay, now everyone is saying it's pretty okay. All right, perfect, wonderful. Right, guys, once again, thank you so much for taking the time out to attend this webinar. In order for me to continue, I just wanted to, let's say, collect a little bit of information about you guys. So by saying yes or no, can you please confirm if you have joined any of my previous webinars or if you have joined my recent webinar, which we did last week? Okay, a lot of no's, then yes. No, first time joining. Okay, okay. All right. Wow, wow. Okay. Have you seen any of my previous webinars? Okay, I can see a lot of no's coming. Okay, well, so why don't we begin by introducing who I am. So my name is Naeem Aslam. I am the Chief Market Analyst at AvaTrade. I head the entire research for AvaTrade. I come with over 10 years of investment banking experience. I have worked as a hedge fund trader, as an equity trader for Bank of New York Mellon and for Bank of America. I have ran the research desk for several other different companies throughout this period as well. So that's just a brief little bit about me. All right, so let's begin by looking at the most important slide first of all. So for disclaimers and risk warnings. Anything which we'll be discussing in this particular webinar cannot be perceived as an advice, folks. If you are seeking for one, please do consider consulting with your own financial advisor, because they know your situation and they may be able to guide you more eloquently or accordingly. Right? So now the most important thing for you guys is the contact details, in order for you guys to have those details with you, so that if you have any questions in relation to markets, in relation to anything that you wanted to know, you guys can come back to me. And believe me, I am very, very active on my Twitter account. You can see my Twitter handle right over here, and then this is the Twitter handle for AvaTrade. If you guys have any questions in relation to your trade that you are placing in, if you guys are not sure that how the market conditions are, or so on and so forth, please feel free to contact me on Twitter by tweeting me and then saying, hey, look, we attended your webinar and it was great, or it wasn't great, if that is the case. But here we wanted to ask you your opinion, because I will show you in a bit that how active I am on Twitter, and then I really listen to what you guys are asking, and then I produce content accordingly. But more importantly, also, this is our YouTube channel, which is the AvaTrade YouTube channel. I am on a daily basis. We have 3 important videos going on these particular channel. Firstly, it is a fundamental video. This particular video covers the entire landscape with relation to fundamentals. We cover fiscal policies, we cover fundamental policies, we cover all other factors from the fundamental perspective that can really move the market, including the economic data and the economic numbers, and the fund flow, and everything is pretty much packed in that 5 to 6 minute video. So please do watch that, and I will show you in a bit where to find those videos as well. The second video is more dedicated with the technical analysis, and this is where we talk about, specific derivative, and then we will show you the okay, if the price is broken to a certain level, from a certain level, why it is important, what is the next level of entry, what is the next level of support, what indicators are really telling us, what is the price action telling us, what if the price breaks from a certain low and high, and how to make sense of that. So we explain everything in detail in that video. And remember, all these videos, they are hosted by myself, not by anyone else, so you could really get the great interaction with that. So this is our YouTube channel, as you can see. From here you can see this, the daily videos are uploaded on a daily basis, obviously, but we really pack all the, like I said, all the fundamentals that you need with respect to the markets, so that you guys have all the information. And on top of that, remember I talked about the third video. The third video is about coronavirus, and it is about coronavirus and its influence on the financial markets, that how the developing situation of coronavirus is really impacting the market. I don't want it to spend too much time on here, because I don't want it to steer away from our main topic, which is the master class about the US, how to trade the US NFP. But that is the all information in front of you. Now, something very, very important. This is the Twitter handle, and then you can see that this is my Twitter handle, and I am very, very active in relation to my tweets. I talk about all the major economic data which is coming out. I talk about the major fundamentals, talk about the points which can really move the markets, the factors which can really move the markets, and what central banks are talking about, what is the noise in the market, how to filter that noise out of the market, and how to make the sense of that. That is the most important thing. So you get all that information absolutely for nothing. Just keep following us on the Twitter. So again, the Twitter handle is right here, and we will give you all that information. And here is the Twitter handle for AvaTrade. Right, now let's go back. So in terms of our agenda for today, what we are going to talk about is obviously the importance of the US NFP data, right? So why is the US NFP data important? Secondly, we will talk about what makes the US NFP reading. So what are the components behind it? Obviously, I will go through everything in detail with you guys. And thirdly, what instruments to trade on the back of that. Now, just to get the idea of everything, so some people, let me just run through some of the questions. Can the website be downloaded? Okay, yes, the webinar will be downloaded. Don't worry about that. You can always download all the webinars. Just help me to understand a little bit about you guys. How many of you are actually considered as newbies? If some of you guys who are just starting off with the trading, just say yes. Of those guys who are just literally starting trading now. Okay, and now I wanted to hear yes from those people who consider themselves a slightly bit more above, who've started to trade for the last 2 months or so. Okay. Okay, and who is here? How many of you guys are there who would consider themselves as pros, seasonal traders? They are very much skilled. Okay, intermediate. Okay, okay. So we have more people with the new with people who are just literally learning, and then they are new to the trading world. So we don't really have actually anyone in here who is absolutely skilled with them. So okay, so this helps me to, and the reason that I ask you this question is because this really helps me to understand that what is your skill level, so that I can really determine things accordingly, so I can break them down in a lot more detail, so for you guys to understand that. Now, going back to our agenda, the next thing that we are going to talk about is the current state of markets and analysis. Over here, I will look at various different markets around the globe, and then we will look at the most fundamental question, which is the rally fizzled out? Has the rally fizzled out? Because we have seen this rally in the last week or so, especially last week in the equity market, but which seems to be fizzling out today, because we're seeing the equity market moving lower. And then I'm going to answer that question for you guys, if that rally has completely fizzled out, and what are the chances for us to move higher from here, and then how to really incorporate the upcoming US NFP data with respect to those. Then, of course, defining level comes part of that, and defining a strategy with respect to it. Right. So let's begin, and let me bring out the MT4 for you guys. Here we go. So I believe all of you guys can see my screen, right? So this is the overview that I have with respect to my markets. I have all the currency pairs that I will look at, and the major markets. But before we do that, remember, we need to understand what the importance of US NFP and why it is so important, why it really moves the market. Now, The reason that it really moves the market so much is because the US NFP is the most important number when it comes to economic numbers, because this tells you the health of the labor market over in the US, and if the number is good, then obviously it tells us that yes, we are going to have a better economy. But if the number is bad, then it is going to tell us that the economy is not good. In fact, right now, one of the components which really is quite important is the ADP non-farm employment change, which is right over here, right? So you can see that this particular ADP non-farm employment change number has come a lot more better, which it has come at minus 27K. Now, let me just quickly go into the market reaction and then see how the market has reacted to this, because there should be some serious amount of a reaction to this one. Okay, there we go. We can see that the dollar is moving lower and the euro is moving higher on the back of that. Let's quickly look at gold as well, how gold has performed on back of that, because gold is usually very reactive to these news. So you can see the data was positive, and now the the gold price is selling on back of that. In fact, it is touching 1578. Very, very important. You see, like when we are going to get these economic numbers on Friday, right? Because the number is, but the US NFP data always comes on the first Friday of every month. So you have this opportunity every single month. And before that, we get the opportunity on Wednesday, which is today, the ADP number. Because this ADP number has come a lot more better, because we have minus 27,000 jobs, minus 27K number over here, as opposed to minus 150K. Remember, market was expecting a lot more dramatic, a lot more bad number, but what we have right now is not that bad number, meaning that the economy is slowing down. There is no doubt about that, but the economy isn't really falling completely off the cliff at all. Yes, we are likely to see the recession because the labor market is in negative territory, but that's okay. And remember, in about an hour's time, when I would have finished the webinar today, I think we're going to run well over our time because we are running behind with our time. At 2 p.m., we're going to have the second most important component for the US NFP, which is the ISM manufacturing PMI data. At 2 p.m. London time, it is going to hit us, and the expectations are for this number to come at 44.9. Now, if the number again comes in better than the expected, remember, we're going to have a 2 odds in favor for our US NFP number to show a strong reading. How? Because the ADP and NF non-farm payroll employment number has confirmed a positive, well, not positive, positive in a way that it has come better than the expected number. And we have seen the reaction of that number clearly on the market. Look how the gold price sold off initially, and now it is somewhat recovering. And now we can also see euro dollar moving on the upside on the back of that. I will explain all the market reaction in a bit when we will look at the market levels, but let's understand the components of that first. So then on tomorrow, Thursday, we do not have anything important, but when it comes to Friday, this is at 12:30, yeah, at 12:30 GMT. Sorry, my apologies. This is a GMT time, not the London time. This is a GMT time. 12:30 GMT, right? We are going to get the US non-farm payroll number, right? Remember that. This is very important. 12:30 GMT time, we are going to get the US non-farm payroll number. This is the number which matters the most, which is the non-farm employment change. And average hourly earning isn't really something that we will be paying attention to. No one will be paying much attention to. Everyone will be paying a lot of attention to this non-farm employment change. And that number is supposed to be at minus 100K. If the number comes better than minus 100K, for example, it comes as minus 50K, if it comes at minus 30K or minus 70K, that will be considered from the market perspective that yes, the economy is suffering massively, no doubt about that. But the situation can recover. The Federal Reserve, the way that they have cut the interest rate, it can help the market, and all of that with the monetary policy and the fiscal policy. And on top of that, we have another 2 trillion worth of fiscal help coming from the US government again. Remember, Trump has talked about this yesterday. He said that he wants to spend another 2 trillion US dollar on the infrastructure. That isn't baked into the market at all yet, at all, right? Well, anyways, moving on to our instruments. What instruments to trade? Folks, this particular data is as big as it can get. It sets the tone for the trading for the entire month, for the entire world, right? This is the importance of this data. So it doesn't only affect the trading over in the United States, but it also affects the trading throughout the world, because US is the biggest economy of the world. So that is why it is so important to pay attention to this particular number. Now, with respect to what instruments to trade, as you can see, anything which is dollar denominated is going to be affected, whether it is your euro dollar, which is right over here, whether it is your sterling dollar, which is right over here, right? So they are going to be heavily impacted. At 12:30 GMT on Friday, you're going to see the price moving all over the charts, no doubt about that. Similarly, gold price is going to be impacted as well. And crude price are also going to be highly influenced with that. That is your fourth derivative that you are going to look at, right? Look how the market is still shifting and digesting the news. The market is still keeps on dropping it. Very interesting. The gold is on the mend, and now euro dollar is dropping. Anyways, you will see a lot of reaction on Friday with respect to this. The fifth derivative that you can trade is the S&P 500 index, because when the market will open at 1:30 London time, or 2:30 London time and 13:30 GMT time, you will see the S&P 500 index evolving to, reacting to that. But because we are trading over here futures, this S&P 500 is a futures market, so you are going to see the reaction pretty much straight away the moment that the data is going to hit the terminal. Are we all clear so far on what I have discussed? Yeah. Okay. Okay, great. So a lot of people are saying that. There are a few questions in there. I will answer them towards the end. So please do not worry about that. Please, can you share the Excel you use for monitoring? We cannot share the Excel that we use to monitor that, but we on our website you can see the all the major articles where we do everything with respect to that. Okay, all right. Thank you. Right, let's continue to move forward. Now, we are going to talk about what we talked about so far is how to find the data, the importance of the economic data. The third point that we talked about is the fundamentals that are really important. And then we talked about what derivatives you can trade on the back of this particular data and when it will hit the market. And luckily, we also got lucky that the data hit the tape and then we saw the reaction. Now, let's define the market levels and then see what can be expected. I'm going to begin with the euro dollar first of all. As always, the first thing that we got to do is go back to a bigger time frame and then define our support and resistance levels from that particular time frame. All what you got to do is click on the day chart over here and then click minus over here and then see what is the trend. What I can see is that this is the lowest low on the chart. This is the highest high on the chart. This defines my curve. If the price is trading up and up, I will say the price is trading to the upper boundary of the chart. If the price is trading lower, I will say the price is trading to the lower boundary of the car, okay, on the curve. So this will be classified as high on the curve. This will be classified as low on the curve. Now, when I look at the price right now, we can clearly see that we are trading towards the low of this curve, because towards the lower end of this curve. And what we can clearly see is that the price is in a dominant downward trend. You can see that, right? Because this being the highest high, a lower high, another lower high, another lower high. But right over here, the price started to do something else. What it started to do, what it started from there was that this particular move, which was pushing the market lower, it all of a sudden it went out of whack. Why did it go out of whack? Because the price dropped to this level, which was very, very important if we look at these particular angles over here, because this is a major support zone, right? Major support zone, something which we haven't seen since 2017. So the moment, the importance of the curve that I've explained to you earlier is, the closer we are to the extreme end of that curve, the important the support and resistance levels are likely to become. Now, if we are on the higher end of, if any support level which is over here and it is very, very close to the lower end of the curve, it is very important. It's going to have an enormous effect. And then we have seen the evidence of this particular zone, this particular support zone, right? Let me just define that support zone for you guys. So this is over here, and I'm going to put it over here. So this, I always define that by two lines, right? So this is the lower boundary, this is the upper boundary that makes my support zone. So you can see from here that from the daily time frame, that the moment that the price came into this particular support zone, we saw a massive rally. And another reason we seen massive rally from here as well. Let me define that one once again. Right over here, yeah. Let me just, sorry, over here. So just taking this boundary and this boundary, the gap, that's the one that I'm going for. So the market dropped and then it went sharply up and then it dropped back up. All what I wanted to say to you over here is that these levels, these support levels are very, very important at the extreme ends. And that's what you should be always focused on. So now we have, by doing that, we have defined our support level with respect to our euro dollar. If the price comes into these levels on Friday, boom, we are in a game. We will be ready to play this. Now, in terms of our resistance level, let me define those resistance levels. Those resistance levels are just going to be right over here. That's the first one. And then the second one is going to be right over here. So I am only and only interested to trade the price if the price comes into these levels. If the price doesn't come into these levels, I am not remotely interested to trade the price. Because remember, this is what we are talking about, the US non-farm payroll. It is likely to bring huge amount of movement in the market. And if it brings that kind of a movement in the market, that means that we need to be careful. We need to define our levels with pretty big, right? So now we're going to move on to S&P 500. We've done the euro dollar. We will do the S&P 500 index quickly. Again, we're going to go to our daily chart. We're going to make it small. We're going to see that where those bigger levels are. First of all, we're going to determine where we are on the curve. This is the lowest point. Forget about any lines, any moving averages, anything on that. This is the lowest point. This is the highest point. Okay. Now we go down and then we find our good important level of supports. Okay. So the first level of support is obviously the lowest low on that chart. So this, I'm going to define that by marking the low over here and wrap it up from here. That makes my first major level of support. Obviously, the price is highly likely that it is not going to touch there, because this on Friday, it will surely not go there unless the sell-off, it just takes something completely different shape. Because right now we are focused on this particular low, and in order to define that support zone, I am going to wrap it up like this. So this runs between 2170 to 2227. Yes, this is my minor support zone. This is my major support zone. I know my major support zone is very, very strong, and that's where I'm going to wait for the price. But for now, this area of support is also equally important. Remember, a lot of what I am talking about over here is mostly for passive traders, not for active traders, not for scalpers, because for scalpers you have to go into a short-term time frame. Either for that you have to go into a 4-hour time frame, or you'll have to go to a 30-minute time frame, and then define your levels accordingly, because that will be able to give you much better information. Because if you don't, it's difficult for the price to really work from onwards. Because if you are a scalper, then what you're really looking for is the top right over here, this consolidation area. This consolidation area really makes that area of it makes really important area of resistance. So if you're a scalper, then you are focused on this one. But if you are a passive investor or a swing trader, then you wanted to focus on your daily chart, and the daily chart tells you that the important level of support is very much over here, and then followed by over here. This is your resistance level for scalpers, but the resistance level for passive traders is going to be the previous support right over here. Let's wrap it up. So what we do is we double click on this line, we bring it a little bit low like that, and we double click on this line, we bring a little bit like that, and then we have our resistance zone. Now, folks, the price is trading currently at 2479. If you are a swing trader, you will not consider this as a level of resistance. You will consider this as a level of resistance, followed by the next level of resistance is going to be in around, I would say, is going to be in around over here, because you want the price, you wanted to take those extreme levels. You don't want it to waste your money on stop losses getting triggered and triggered and triggered and triggered, and leaving you nothing but just hole in your pocket. So always and always choose for those big levels. And more importantly, this particular moving average is your 200-day moving average. So I am sure that once the price comes over here, not only we will be quite close to the upward of this curve, meaning this resistance zone is going to have a high importance, but also the 200-day moving average is going to be over there as well. So it will have even more importance. But it is also equally right to say that if you don't want it to consider, you don't want it to wait until then you can move this resistance right over here. So this becomes your minor resistance, this becomes your major resistance. This resistance is only and only for scalpers, with the traders who are looking for intraday trades, nothing more. Yes? Okay. Now, we're running very much over time, so let's quickly go on to gold and also do crude as well. So with respect to gold, what we are really looking at, again, go to your daily time frame, make the chart as small as possible, forget about all these lines, we will just delete them. Let's just delete them. In order to delete them, right double click and delete, double click and delete, double click and delete. Same with this. All what we're looking at over here with respect to gold is daily time frame, the lowest point, the upward point. Okay, now when it comes to gold, there is a slightly different philosophy. You don't want it to sell it too much. You don't want to sell into rallies. Why? Because US economy is in a major downturn. We are about to go in a recession, and this means that we should be really and really only and only looking for long trades. because that is likely to play better, especially from swing trade perspective. For day trading perspective, of course, you can look for both of them. But it is my opinion that I think it would make more sense. But if we look, when it comes to gold trade, we only look for long trades. Does that make sense for you guys? Are you guys with me on that? Okay. Okay. Great. Okay. Thank you. So let's continue. Now we know that when it comes to gold, we are only like, we wanted to take long trades. So where are those support zone? Obviously the price isn't gonna come here anytime soon. So we gotta go and then zoom into the chart and look for a nice area of support. Now what we do is we have to look to the left, see where the price can actually find its first support zone. Obviously the first support zone becomes very clear to me that right at this particular point. Because if the price comes into this level of support, I am very happy for the price to I'm very happy to trade the price. But if the price fails that level, then the next level I wanted to take is I wanted to make sure that I wait for the price to come into a better level, or what we call a major level of support. And it is not likely for the price to come over here, folks. Really, I think things needs to change enormously for gold price to change over to come into here. I think this remains a major area of support right now, even though this is a major area, but I don't think we're gonna fall up to here. So I think this is highly likely that we may touch. So because of that, we can make an exception and we can go into our 4-hour time frame and then try to find another important level of support. And what I'm going to do is, that important level of support, I am going to pick up just above our other level. I'm going to pick up where the rally actually started, because look at the massive boom that we have seen out of this particular zone. Boom. And we haven't visited this area ever since. So if price drops into this level, I will be very happy. This is a minor area of support. This is major area of support. Let me move this support over here so that you guys can really see. This is all support areas, right? Support and support. And you can always take another aggressive area of support as well, which is going to be right over here. But remember, keep your stops very sharp with these ones. Very sharp stops. Price has already tested that. It may come down, form the double bottom, and then it bounces back up. But this is a very aggressive area, so keep your stops very tight. With respect to our resistance zones, the first resistance zone is going to be right over here. I believe this is a good area where price is likely to come in and then start to roll over again. And then the next one is obviously the extremist point on this chart, right over here. Now, one can always say that, can we not take this area of resistance? Yes, you can certainly take this area of resistance as well, because this is where the price started to sell very aggressively, and then it bounced back up, and then now it is retesting. Actually, guys, what I also wanted to point out to you guys, head and shoulder is a very famous pattern, and I'm sure many of you guys already know. We are forming reverse head and shoulder, this being head, and then this probably being a shoulder. And if it breaks, we are really looking for a massive move all the way from 1600 to 1400, about $200 move. And that means that price can go all the way above 1800 if the pattern really plays out. Remember that in your mind. Are you guys clear on that? Because I just wanted to make sure that you understand gold analysis is very important. Anyone who is not clear about the pattern, the one that I explained just now, please say no. Okay, okay, so some people are still not clear about the reverse head and shoulder pattern. This is your shoulder, this being your first shoulder. This is, I'm talking about reverse head and shoulder. Yeah, this is your shoulder, this is your head, this entire area is your head. Yes, and this, we are forming the right shoulder right now over here, right? This is a reverse head and shoulder for gold. Remember that. Okay, great. Now people get it. All right, cool. So let's move on to crude before we finish off, because it is very important and it is my favorite trade right now. Folks, unfortunately, we'll have to go to a weekly time frame because the sell-off is so intense and so great that we have to go into a weekly time frame. So in order for that, let's bring the trend lines right over here, and the price, let the price come into our zone, and let's bring it over here. And then look, back in 2001, the price formed this bottom, and then we saw this massive, humongous, huge rally, and then we saw this sell-off. The sell-off faded well before that. Again, another rally, consolidation, another sell-off, followed by another sell-off. Now we have one more sell-off. Look at the RSI. It was extensively sold out. Let me just draw this line over here. Obviously, the RSI isn't as extreme as it was during this period, yeah, that which was 2015 when we had excessive supply. The curve, the RSI curve is skewed to the upside, right? But it is highly oversold, and which really gives me the opportunity that the only trade when it comes to oil I am interested in is on the long side, not on the short side. I want you guys to understand this concept. Do you understand this? Any questions on that? Okay. When it comes to oil, we are not interested in taking short trades because we are very low on the curve. You can see this is the lowest point, this is the highest point. We are right towards the lowest low, and this is on the weekly chart. That is even more important because the importance of the curve becomes even more significant when we go on to bigger and bigger time frames. And under this circumstance, we have gone to a bigger time frame. We have gone to a weekly time frame, which tells us that this is a trade which is really asking for us to take the long trade, not the short trade. Someone has a question? Okay, fire away. Keep writing the questions, guys. So someone asked me that, can I repeat that? Guys, if you are looking for a trade for oil, we are very low on the curve, meaning very close to a major area of support. It makes sense that one should be or could be looking for a trade to the upside, which is likely to end up in a more favorable position than a short trade. All right. So someone is asking me the other chances for the price to go even lower than that. Of course, there are always chances. Of course, there is. But I think what is quite important right now also is that the traders, like, the pain is too high for the oil industry. It is highly likely for Saudi Arabia and Russia to come to the table and agree on a supply cut. The moment that happens, you will see a massive rally, massive rally from here, and oil price is gonna really shoot. Now, with respect to resistance, what I'm really looking for is this area right over here as our first area of resistance. And our second area of resistance when it comes to oil, I am looking at right over here. But it is important that when we are defining resistance with respect to oil, we should change the time frame to daily time frame and then look for the resistance from that time frame perspective, because we know that the support is coming from a weekly time frame. So in order to do that, what we can do is we can just make it a little bit more accurate and make it a little bit more narrow so that we get the opportunities to take profits at good time. So in order to do that, I think these areas, the one which I have just drawn on the charts right over here, this area, and of course, what you can do is you can take this area of resistance as well, this area of resistance. Hey, let me bring this line a bit down, and then we will bring this line over here, right over here. So you have resistance, resistance, major resistance, and just one support sitting right here. Of course, guys, non-farm payroll is going to have impact on the Dow Jones, it's going to have impact on NASDAQ, it's going to have impact on every single derivative, but I have just defined the strategy and the levels for you guys for the major markets. All right. So guys, good luck with everything. This has been a pleasure to be with you guys. And I really hope that you guys have gained a lot of knowledge out of this particular webinar. And please always remember that I am here for you guys. In order for you guys to contact me, here is the contact details right over here on a Twitter. If you do not have a Twitter, then make sure that you do have Twitter, you do download Twitter, you do become an active member on Twitter, because we produce all the activity, all the major news on Twitter. Okay, so that's my handle. That's all for today, folks. I really appreciate you guys coming and you guys sparing your time to be with me here, and good luck, and see you guys next time.